All right. Good afternoon, traders. Thanks for joining us for another partnered webinar brought to you by Shark Indicators. Go ahead and take a look at the disclaimer on your screen. And also go ahead and type a Y in the chat if you can hear me all right, because that is also pretty important. So today we're identifying price patterns that matter with Kris Lassen. So my name is Ty. I'm one of the guys here at Shark Indicators. For those of you unfamiliar with our company, we've been around the NinjaTrader industry for over 5 years now. Our mission is to level out the playing fields and arm retail traders with the same power and technology that was once only available to deep-pocketed hedge funds. One of our trademark products is called Bloodhound, which really is revolutionary trading software. It works with third-party indicators, and it lets you build, backtest, and execute any system you can think of without coding, providing clear and precise signals. So many of our industry partners create their own trading strategies using Bloodhound, which in turn allows you to trade them, enhance and tweak them, making them your own. So what we do is we select top NinjaTrader partners to bring you a lot of variety and exposure to different trading methods and personalities. And each are successful in their own right, and each offer a unique trading style. So just a bit of an introduction to today's partner. Before becoming co-founder and CEO of Lizard Trader, Kris Lassen initially ran a company specializing in sentiment analysis called CentiTrade, which was basically a big data analysis tool that interpreted the psychology of the financial markets on the NinjaTrader platform. And following CentiTrade's acquisition in 2014, Kris co-founded Lizard Trader with Harry, aka Fat Tails, who many of you should be familiar with through NinjaTrader's support forum or Futures.io. So without any further ado, I'm going to go ahead and promote Kris to a presenter and pass the mic his way.
All right. Hello, everyone. I guess, Ty, if you could just confirm that you can see my screen. You should see the Lizard Trader logo.
I do. Yep. You're good to go.
All right. Great. Yeah. Thanks a lot for the introduction, Ty. Always a pleasure to do these events for the Shark Indicator community. Appreciate the opportunity to do so. Today's presentation is about price patterns, what they are, and how you can use Bloodhound to test and validate setups using price patterns. Actually, one of the things that I really enjoy about these events is that most of you are pretty well advanced, taking a systematic approach and understanding the various challenges that we face as traders. Still, before we get going here, I just quickly want to go over our disclaimer as well. Making it as a trader is certainly not easy. Probably one of the hardest businesses in the world, and most of you here know that already. And you know that trading is associated with considerable risk, so make sure that you understand that and keep in mind that the results from the examples that we go over here today are hypothetical and not based on actual performance. So just to add a little bit more background to the introduction, that's me to the left here, and then Harry is to the right. Yeah, as Ty mentioned, Harry is fairly well known through the NinjaTrader community. If you've come across any of the ANA platform, ANA indicators, that's Harry's work, the super trend, among others. Some of the most downloaded indicators for the platform are programmed by Harry. So, as Ty mentioned, my background is in sentiment analysis. This was a tool that basically was mainly for institutional investors, helping them implement artificial intelligence and a way to automatically read and interpret financial news into algorithmic trading models and managed futures products. And that in turn gave me some insights also to how the institutional side of things look. And yeah, that's what we do here at Lizard Trader. We work with very well-known concepts, a set of objective price benchmarks, if you will, where a critical mass of traders are likely to respond in a coordinated way to the same price levels at the same time. So if you want to find out more about what that is all about, you might want to swing by the homepage after the webinar. We have a mini video course that will get you up to speed on what our approach is all about. And we also have a free membership section with a extensive indicator library and a resource section as well. All right, so price patterns. That's what this webinar is about. We're going to look at why and when price patterns have a higher probability of success. So this goes to the core of what technical analysis and technical trading is all about. So there's no new fancy holy grail indicator here today. There is no silver bullet that will magically turn your trading around. We'll first talk about what price patterns are and why we like to focus on reversal patterns specifically. And then we will look at how to find key support and resistance levels and how reversal patterns around these areas can increase your probability of success. And then finally, we'll look at a simple method to determine your long and short bias for the day. Of course, a lot of trading involves managing our emotions. So becoming a successful trader involves understanding human psychology and how the trader's mind works. The oldest part of the brain, the reptilian brain or the lizard brain, is supposed to keep us safe from danger. And that is what we often refer to as a survival instinct or the flight or fight reaction. So trading is ultimately based on that type of psychology, on fear and greed. So the price patterns reflect human sentiment that we see in the trades. And once you know how to identify these patterns, you are effectively learning to read human behavior as it appears in the market. So for example, if you see the trend pausing or ranging, a critical mass of traders consciously or subconsciously are asking, so what's next here? Is this about to reverse? Should I lock in some profits? Or if they've been sitting on the fence, should I get in now before I miss the next big move? Markets are range bound some 80% of the time, so it makes sense to keep track of reversal patterns that plot around the current range high and low points, as well as around the key support and resistance levels. And to do that, we have developed an indicator that we call the auction bars. This keeps track of two things: the current trading range and spike and key reversal patterns. So for the next few minutes, I will talk about the auction bars and how they're used to deal with defining the range and these reversal patterns that plot around the upper and lower edge of the range. We'll start with the easy stuff here. The spike bars, they are pretty obvious on the chart, so a lot of traders will act on them. Basically, a spike bar will tell you the prices were rejected at a certain level and that the market pushed back to where the candle opened. So what we're looking for is kind of like a geometric makeup of the bar. You're looking at the upper or the lower shadow and how it compares to the body of the bar. So for bearish spikes, you want to have a bigger upper shadow when you're comparing that to the candle body, and the lower shadow, and the inverse for bullish spikes. You have to have a longer lower shadow when you compare that to the upper body and the shadow, upper shadow. So in the following here, I'm going to show a couple of pre-cut chart examples that will explain the main points. And then later on, I'll get into some more recent examples from this week. And yeah, I just want to make sure that we're all on the same page here and that we get the main concept of this before we get into the recent charts. So again, the idea is that the market is ranging some 80% of the time. So we're looking for reversal patterns around the higher time frame ranges, and that's what these horizontal lines are. They're what we call the auction range. It's a range that is generated by a secondary bar series. So this is a 5-minute chart of the crude contract, and the higher time frame trading range is created using a 60-minute time series. And once you see a sudden move like this, breaking the current range, then we start to plot a new 60-minute range, and that will then be the new auction range in a 60-minute chart. And then, as you see here, we have a bearish spike form right at the upper edge of the new auction range. And once the low of this setup bar here, this is the spike. Once this low is taken out, then we have a reversal signal. So here it's just set up, and then on this second bar, this is taking out the low, and then it converts into a signal. So again, for spikes, we are looking at the upper shadow here for a bearish spike, comparing. That's not much of a body on this one, so but you see the upper shadow is a lot bigger than the lower, so that suffice for the definition of a bearish spike here. And then we don't have a reversible pattern down here. We get above the mid-range, and then we see here two bullish reversals. This could be a spike here. This is certainly not a spike, but they are plotting here at the mid-range of this new 60-minute auction range. And I will talk about these key reversal patterns in a minute. For now, we're just going over the spikes. Just before I get to that, I just quickly want to show you that there is a lot more going on in the background here than looking at the higher time frame ranges and the geometric outline of the spike patterns. For example, we also look at the significance of the range and volume. So you can say that the spike bar should have average volume or average range or above average in order to plot. So that makes it easier to define these reversal patterns. You can say that it needs to have some significance to it. And you can also define the shadow size of the spike bars. And there is also a swing strength definition by a zigzag filter marking the higher high and the lower low of the N bars in the swing trend definition. So in here I have a swing strength of 5 bars. So you need to set a new high or a new low in order to generate these reversal patterns. Effectively, these and a few other settings will allow you to customize signals according to your own risk tolerance level. There's quite a bit of flexibility in this. And as for the reversal patterns, the key reversals, they build on the same concept. We're looking for price rejection, but these are not as easy to spot in the chart. We're analyzing the high, low, and the close of the current bar and comparing that to the previous one. So again, we're looking for a swing high and a up move. And if you then set a new high and you see a lower close, that will then mark a reversal down. There are, of course, other and more restrictive definitions of this pattern. For example, that you want to have a close below the low of the previous bar. that would be a more restrictive definition, but I think for now we'll just stick with this simple definition because it's fairly easy to see and understand in the chart. For a reversal up, it's of course the inverse. You want to set a lower low, and then you want to have a higher close to create a reversal up reversal. All right, so this is a close-up of the chart that we looked at earlier. Now focusing in on the reversal patterns, we see that this is a new low here, and that we have a higher close. Again, the comparison is with the previous bar, so unless you have this coloring here, the blue color for reversal up and yellow for reversal downs, it would be quite hard to identify these in the chart. So it's much less visually obvious than the spike patterns. Then we have this breakout from the range with an outside close, and then we have this new auction range of the last 60 minutes, and then as I said, this yellow bar up here is a reversal down pattern. We have set a higher high, and we have a lower close, and then yeah, this confirms once this low is taken out. Same for the reversal up. It's just really important to understand that these are only setups until this high is taken out. So you get confirmation from the price action here, and one way to manage this once you see a setup appear is to set a stop limit order at the high level of the setup bar, so that the trade is entered at the moment that this level is broken. Now that is something that you can set Blackbird, that's an extension of Bloodhound, to do automatically. It's a quite nice feature for this particular setup. And then you can set the stop loss just below the low of the setup bar once this is taken out. And that is also something that Blackbird allows you to automate. So we have a data series marking these as candidates, and then it locates the lower low of the candidate bar. So in the event that you get a fill on your stop limit order, then the stop loss is set automatically according to your specifications, how many ticks you want to have that below the low of the reversal up. All right, so generally we can say that the higher the time frame, the more reliable the pattern. Institutional investors typically want to avoid market noise, so they're looking at higher time frame charts such as 15-minute, 30-minute, or a 60-minute chart. So this is a 15-minute chart of the crude contract again. And the auction range here is based on 360 minutes. When you're moving to higher time frame, you want to adjust your auction range. So we had 60-minute auction range for a 5-minute chart, and now we're at 360 minutes for a 15-minute chart. Generally, we recommend a multiple of 10 to 50 times your primary bar series. And yeah, another thing that we see in this chart is we have R2, we have R1. R1 are reversal patterns. This is a spike, obviously, that plots on one bar, and these R2 patterns, this is also our R2 pattern, are what we call composite bars. That's when two bars are spliced together in order to show a higher time frame reversal in the same chart. So 2 times 15 makes 30 minutes, which is what we see here. This is just a feature that allows you to be alerted of additional reversal patterns that plot outside the specific time frame of your chart. Of course, if you see a pattern confirm in several time frames, preferably higher time frames, it increases the probability of a worthwhile setup. So that comes down to understanding the concept of herd mentality and identifying situations where enough traders are likely to observe and execute on the scenarios that they see the setups. And by paying attention to whether these reversal patterns plot at nearby key support and resistance levels, you are effectively stacking the odds in your favor. Basically what we have then is an alignment of belief systems, and what often follows is coordinated buying and selling. So what do we mean by key support and resistance? Well, at Lizard Trader we mean factual, transparent, and well-established price levels. And we can start off with the example of the prior high, low, and close, just to drive the point home here. Probably often seen a bounce following the first test of yesterday's low, or a pullback at the first test of yesterday's high. Well, everyone knows where these levels are, so when enough traders have a predefined idea of what to do when prices reach these levels, the same goes for the first test of yesterday's close. Enough traders are looking at gap strategies and will close their positions in this area. There's simply a critical mass of traders responding in a coordinated way to the same price levels at the same time. Of course, that can only happen if we agree where those levels are. Obviously, there's little room for interpretation when we're talking about the yesterday's high, low, and close levels. At the first key support and resistance level we'll talk about are the pivot levels. They're pretty much just as factual and transparent and well established as yesterday's high, low, and close. Everyone knows where these levels are located because they're the same for everyone. It doesn't matter what chart or bar type that you use. These support and resistance levels will always be the same because we use the high, low, and the close of the previous session to create them. They also have a fairly long tradition. Back in the day, before we had powerful computers, floor traders used the simple range calculation to establish market value, and a few additional formulas accounting for the volatility of the last session created then support and resistance levels above and below the main pivot. So all it is a range calculation of yesterday's price action with the added weight given to yesterday's close. In this example, I've used the high and the low of the previous regular session to create the pivot levels. Of course, the crude trades at the NYMEX, so many institutional traders will use the high and the low of that index's business hours to determine the support and resistance levels for the current session. And we do also recommend that if you're trading other markets that are dominated by local traders, so those would be certain index futures, bonds, and some other commodity futures as well. Yeah, so here we're almost exactly in the middle. The close is almost exactly in the middle between the high and the low of yesterday. So that is creating a very narrow pivot range for us here. So we're waiting for a price catalyst, and we certainly got that here, blowing straight through the first support level, but then finding some support at the second level, which we also know to be the low of the extended session here from the previous session. And then we saw this reversal pattern plot, some hesitation coming up on the S1 level from below. So that would be resistance at that point when you're coming in from below on it, and then going all the way up to the first resistance level here. So what else can we say about these levels? Well, the distance from the pivot to the second support level here equals yesterday's entire trading range in one direction measured from the pivot. So that will often mark the low of the day, and the opposite goes for the second resistance level above the pivot. So that's also the entire trading range in the opposite direction measured from the pivot. And as for the first support and resistance levels, they too are based on yesterday's trading range. So if we're trading between these levels, we're range bound. And yeah, as you see, the pivot calculation is fairly simple. It's very transparent and has a long tradition. So it's easy to see why traders are likely to react psychologically and emotionally on this information. So it sort of turns into a self-fulfilling prophecy. Also, you probably want to avoid this, which is what will happen if you go for breakout strategies. You probably want to buy support and sell resistance instead, and that's case in point for the pivot levels. Resistance is where sellers are looking to cash in on their profits, often overwhelming the buyers and causing a price imbalance to the downside, whereas support, of course, is where bargain hunters often step in and overwhelm the sellers, causing prices to go up. Another thing that you want to be aware of is the institutional perspective of execution. Their activity account for some 90% of volume, so the main challenge for them is to minimize impact when submitting their orders. The last thing they want to do is to move prices when they enter their positions. So they will want to distribute their positions into many smaller orders using market value to obtain the best possible price. There was a survey out a year or two ago showing that 60% of institutional traders, in fact, use the volume weighted average price, or the VWAP, as a price benchmark to control execution costs. Also, partly because that's how bonuses are determined. So if you have a better execution than the VWAP, then you get a bigger bonus. So definitely makes sense to know what the VWAP is and how to position yourself around it. So here we have a daily VWAP chart of the crude contract. All you need is price and volume data, and see here the calculation starts with the first transaction of the current trading day, ending with the last prior to market close. So the VWAP is anchored at the start of the full session, and then you have a red stable line if prices are moving below the average, and blue if prices are moving above it. And then you have these standard deviation bands to represent value, or overbought or oversold. Overbought would be the second and third standard deviation here, and oversold down here. Yeah, as mentioned, institutional traders are looking to execute as close as possible to the VWAP, and by knowing whether they're likely to participate in the market, it's easier for us to find setups that are likely to see some movement. So in an uptrend like this, one way of using it is by trying to identify retracements coming into this VWAP area. See some strong rejection once we get below the VWAP here, shooting back up. Yeah, these areas here, the second standard deviation, as well as these previous VWAP and value area high and low areas are then areas where you can think about getting out. Yeah, the indicator has these previous VWAP levels. This is yesterday's VWAP, and this is the VWAP of 2 days ago. Here we see in the European session this move up here, and then we get into this area and have some sharp rejection here. So this is definitely resistance up here, and then failing the breakout of this 2-day VWAP, the VWAP of 2 days ago here, just before this this major price event. So you see how the VWAP can be used to read the overall trend, as well as finding possible retracement entries and levels of key support and resistance. So just as with the pivot levels, if you're coming in from below on these previous VWAP or value areas, you have resistance, and then if you're coming in from above here, it will be support. So being aware of these key support and resistance levels is really about being proactive, not emotional, and a lot of dormant higher time frame orders will be parked in these areas, so you'll want to make sure that you're positioned in such a way that you have the odds in your favor. Goldman Sachs, JP Morgan, and the other institutional traders are in charge, so you want to know where they're likely to buy and sell the market. And when you're getting in on key support and resistance by using pivot and VWAP levels, there's not really any doubt as to why you're doing what you're doing. These levels are known to everyone in advance. There's no room for subjective opinion here. It's factual. And you will, of course, be in a better position if you can anticipate and be in front of what's about to happen. Avoid trades, of course, that are going straight into key support and resistance. Try to use it as tailwind instead. Again, we're looking for a critical mass of traders to respond in a coordinated way to the same price levels at the same time. So a big part of this is that the VWAPs and the pivot levels are transparent and objective. They're the same for everyone. And yeah, I think now we'll transition into to Bloodhound here. Basically, you can specify your trading rules in an objective form and think in terms of setups and triggers. This is what will determine the situations or scenarios that create the trading signal. So we already talked about the reversal setup bars and how they're only triggered once we have price action, the high and the low, taken out of the setup. So that is the trigger and the setup mechanics of it. So that's fairly easy to do with Bloodhound. You don't have to be a programmer to do it. It's a really fast and efficient way to determine whether your system has a statistical edge. So in the next few minutes here, I'll go over some charts that I use for my own trading, and then I'll show you how they can all be pulled together in a Bloodhound strategy template. And let's see how I'm doing on time here. I don't want to go too much over time. All right, so let's see here. I want to start with the overview. So what I have here is basically a daily chart, 1,440 minutes, and I have monthly pivot levels on this. So we have the prior month high, low, and close. And then what we want to pay attention to is when we have prices closing in on these monthly pivot levels, as well as the high, low, and close levels. You often see a fairly strong reaction to these levels once they're hit. And as you see here, they're also accompanied by some reversal patterns. At the swing low here, we're at S4, I think. It's an extreme sell-off here, but we had also a very narrow pivot range here. So then we have these midpoint levels as well. Distance between the support and resistance levels is quite wide, so it's a good idea to use these midpoint levels here as well. And then again, we have a price rejection here at the current month second support level, and you see also these price patterns plotting here. Also, keep in mind what the overall picture is here. We have a lower low, lower high, lower low, and then we're setting new highs every day here pretty much. So it will be interesting to see how far this retracement goes, or if this high is taken out and we're starting on a new trend. And I'd like to also have a look at the monthly VWAP. You see here strong selling going all the way down to the third standard deviation of the monthly VWAP, and then coming back into value here, starting the uptrend, and then some hesitation here at the second standard deviation of the monthly VWAP, and then continuing up here. So it's also a good idea to be aware of where those levels are, to find if we're overextended or in value. Then I like to have a look at 15-minute chart with the weekly pivot levels. I also have some background flooding here, just to remind me whether we're setting higher highs and higher lows, or the other way around. And yeah, that makes it a little bit clearer in terms of setting a daily bias. And I think I'll turn that off here, because then the weekly pivot levels will become a little bit clearer. So turn this off here. And then you see here we are now at the weekly R1 level. We got some very irrational price movement all the way up here to the mid-level between the first and second resistance level here. And yeah, the weekly pivot range is located all the way down here. So we also have these auction ranges here, and the reversal patterns that are plotting in a higher time frame chart. So that's always good to be aware of these price patterns that show up in the higher time frame charts. Finally, the overview has a rolling VWAP. That's a rolling calculation of the past 3 days, just as a replacement for a weekly VWAP. So this is very efficient in terms of being a trend filter as well. So my trend filter is basically these two lower ones here with the zigzag filter, and finding if this is red or blue. And then I always want to pay attention to when prices are coming in on the weekly and monthly pivot levels. And then the entry chart would be this. This is a daily VWAP and daily pivot levels. And yeah, we're taking these reversals off the daily levels as well as the weekly and monthly. So we have a strategy template here in the background that are looking at not only the daily pivot and VWAP levels, but also the weekly and monthly pivot levels, important auction ranges. And then once we see a reversal pattern that is plotting right next to one of these, we are likely to have a good support here from yesterday's close. And so this was a inside out trade, so we're going from inside of the VWAP out towards the second standard deviation band. Here we took a exit at yesterday's high, or this upper range here. We also have the first resistance level up here, so a confluence of several resistance levels here. And then we had also a nice example of a outside in trade, which is obviously higher risk, but that can be taken if you have support, or in this case resistance, from R1 here and yesterday's high. It's the first test of yesterday's high as well. So then you take these outside in trades from the outer standard deviation towards the VWAP. All right, so that is pretty much it, I think, for the quick demo of my Bloodhound strategy template here. I hope it's not too convoluted. Let's see if I can get back into the presentation here. Yeah, this is where we were. So with our tools, it's pretty much what you see is what you get. It's not a secret black box where you're not sure what's hiding under the hood. In my experience, that's also not what works when you're trying to read the market. What works are transparent and well-established concepts that a critical mass of traders agree and execute on. So in the NinjaTrader community, these tools have been voted the industry standard, most recently now in 2016 in the True Edge Awards, where Fat Tails was named the Programmer of the Year, and the session tools, of course including the session pivots and the VWAPs, came in as the runners-up for the Indicator of the Year. So if it's all right with everyone, I'll now transition into the special promotion that I've prepared for today. If you're not up for it, that's okay too, no offense. Basically, we've created a pretty nice offer for this webinar, I think, and there's something that both new and existing users can take advantage of. The offer includes our entire suite of premium indicators. So that would be the session packages, as well as the auction bars and a indicator that I haven't had time to talk about today, the zero lag oscillator, as today's topic was mainly price action. So I thought I'd leave that out for today, but it's a quite nice tool as well, zero lag oscillator. Also, the session packages are quite extensive. In addition to the daily, weekly, and monthly pivot calculations that I've shown here, we also have the Jackson zones. There is a rolling pivot if you want to create a 3-day balance point, for example, or if you're trading instruments that don't have reliable volume information, you can use the range weighted average price approximating the VWAP. That would then be for Forex instruments that often have incomplete or not reliable volume information. And we have some bonus specials, of course. For the first 3 registrants, I'm offering a additional consultation where we can customize according to your needs, of course. For example, just having everything set up on your machine taking care of the installation process, workspaces, templates, or customizing this to your trading style specifically. If you use Blackbird, stop loss settings, exit management, and we can do general inquiries, of course, whatever questions that you have on our indicators or system trading in general. Second, we offer our strategy templates with parameters for defining price action patterns in these areas of market value and where institutional price levels are located. These particular templates were developed for crude, as that's what I mainly focus on these days, but it's pretty much a universal concept, so you will be able to adapt this to any other market or instrument that you're looking at. And of course we have our session template handbook, which will teach you all you need to know about how to isolate specific trading times where institutional traders are active. As I mentioned earlier, when you're trading markets that are dominated by local traders that have a strong tradition for using price data from the regular session, you want to make sure that you have the high, low, and the close of yesterday's cash hours to enter and exit your trade. So it's really important that you get the correct price data to set that up. So everything we covered here today, everything we talked about regarding session indicators, auction bars, zero lag oscillator, strategy templates, session template handbook, consulting sessions, and Bloodhound Ultimate, of course, is in this promotional offer right here. Normal price is $21.26, so at total here today at $15.95 you get Bloodhound almost free of charge with this, at least at a very, very steep discount. And for existing Bloodhound users, it's a total of $9.95, so normal price for this is $14.31. I should mention again that the consulting sessions are only available for the first 3 registrants, and those usually go pretty quick, so just be aware of that. And this is where you can find it, listentrader.com/shark webinar. We also have a special featuring the indicator package together with both Bloodhound and the Blackbird add-ons. That of course then includes an additional strategy template and consulting session, helping you hit the ground running with both of these very powerful strategy development tools. All right, so everything that we talked about today, the ListenTrader indicator package, as well as the Shark indicator add-ons, is available at listentrader.com/shark webinar. This offer is valid until Friday, so if it's something that you're considering, make sure to take advantage of it before it expires. And at the outset here, I talked about how the reptilian brain, also known as the lizard brain, is supposed to keep us safe from danger with the flight or fight survival instinct. But these guys also have a very efficient hunting technique. It looks as if they're just sitting around basking in the sun, not doing much most of the time, but they really have quite a sharp eye for what's going on around them. So instead of running around chasing the next opportunity, they've learned that the most efficient use of energy is to sit patiently, listening, looking, and waiting for the moment when there is an opportunity to grab what's right in front of them. And for us as traders, it's a similar situation. It really pays off to have a clear and simple strategy that you can actually understand, so that you can act with confidence and conviction once the opportunity is there. So you want to keep track of these price patterns that we've talked about that reflect human sentiment around key support and resistance, and then anticipate situations where we may see coordinated buying and selling. All right, so I've given you a lot of information last hour. Information, of course, will not get you there alone. So everything you need to get started on this is available at listatrader.com/shark webinar. But as I said, it's up until Friday night, so you still have a couple of days to decide. If you have any questions, you can get in touch with me anytime at info@listatrader.com. And there is also a contact form up on our listatrader.com site, so you can drop me a line there as well. So I think that is pretty much what I had prepared for today. So I think I'm going to wrap up here. Let's have a look at the questions. I will try to answer as many of them as I can. It's getting a little bit late here, Berlin time, but I'll make sure to get through all of them. And if I don't get around to answering some of them, then you can also get in touch with me, as I said, over at the contact form, or otherwise at info@listatrader.com. And yeah, let's see. Any sale on individual indicators, asks Matt. Well, we offer discounts, bundles on 3 indicators or more. So if you buy 3 indicators or more, that's when we get into special pricing. It's mainly for us as a very small operation. Yeah, keeping transaction costs in check and in control. So yeah, and also keep in mind that we're just about finished finally to upgrade for NinjaTrader 8. So we do expect the prices to go up somewhat for that. And yeah, this is probably a good time to get in on NinjaTrader 7 pricing, because you will have a free upgrade for NinjaTrader 8. And that shouldn't be too far off. We've completed the hardest indicators, the toughest ones. So we just want to get all the ducks lined up in a row and release everything at one time instead of doing one indicator after the other. So that's why we're still holding off a little bit. Will we receive a recording? Yes, I think Ty will take care of that. If you can scan for blue bars, yes, you can. We have a data series for both candidate signals and confirmed signals, so you can experiment with that as well. And yes, you can. Nick, if you want the template, you can get in touch with me. It shouldn't be a problem. Do you know when the NinjaTrader 8 versions will be available? That is, like I said, not very far out. We have completed the hardest, which is the session indicators. It's not just updating to NinjaTrader 8, it's also improving the indicators, putting in some features that have been requested and that we've wanted to include for quite some time, and now is the time to do that. So not only are the indicators being updated for NinjaTrader 8, they're also vastly improved. So yeah, I think we should have this done by June sometime. So look out for an announcement from us in not too long. So yeah. Yeah, the recording, yes, there will be a recording, as I mentioned. I hope Ty is recording this anyways. How are your session pivots different from the pivots in NinjaTrader? Well, there's a couple of features in the premium session pivots. I guess we have some graphical support and resistance lines replaced with support and resistance zones, so it's a little bit easier to read on the chart. Also, these rolling pivots that I mentioned, the balance point is integrated. And then we also have a feature which I didn't go over today, but which is quite neat as well. It's pivot projections for the next day or the next week or the next month before the current period has ended. So at the end of the day, you can kind of start looking at the pivot projections, trying to anticipate end of day reversals. It's a quite nice feature as well. Are you running this fully automated using your template, Bloodhound and Blackbird? I am not personally running a AutoTrader from my own machine. That involves certain risks and may not be suitable for everyone. So at my previous company, CenterTrade, we ended up hosting our automated strategies directly through a broker. So that's just outsourcing risk associated with IT and order management. A little bit more cost per transaction, but that was worth it considering the alternative. In my opinion, you can do it with the Bloodhound and Blackbird, but you can also not really just go to the beach and forget about it. So computers crash sometimes, internet connection sometimes lost, and you always have to make sure that the orders were properly executed. So personally, I prefer a semi-mechanical approach where Bloodhound gives me the signals on the system that I've tested, and then yeah, I can evaluate if I want to take the trade or not. So I'm not trading it fully automated. And let's see if I can get to some of these other questions here. Well, I'll forward the compliment to Harry. Has written many indicators for me, and he's awesome. Yes, he is awesome. These are mainly for futures trading. Yes, I mean, what we focus on here is futures trading, but these are very universal concepts, I would say. Of course, it also depends a little bit on the tradition of the market that you're referring to. So, for example, for Forex futures, I wouldn't necessarily look at trading floor pivots, because there were never a centralized exchange taking care of all these orders. So floor trading pivots, there's no really tradition for it in that market, so they are likely to look at something else. And I know that a lot of Forex traders prefer to use the Jackson zones for that have adjacent Fibonacci levels as well. So that is a part of the package in the session pivot package that we have. If you can use it on market analysis, market analyzer, I suppose, yes, you can use our indicators for that as well. Any trading material come with the purchase of the indicators. We do have a tutorial video series, and we have also very well documented indicators, so there's extensive documentation for this. And we're also available for questions if you become a customer, of course. Your pivots allow ETH. Yes, they. You can. It depends on the session template that you use. Basically, you can choose ETH or RTH. they're very flexible in selecting the high, low, and close that you want to define for your pivot levels. Are the R's on the chart for possible reversal on the auction trader chart? Let's see if I can go in here and show. So we have a reversal signal here. Make this a little bit bigger. So in this chart, I'm only looking at single reversal patterns. And as I mentioned earlier in the presentation, once this low is taken out, we have a signal. So if it's only this bar and it doesn't get confirmed within 3 bars, that's my threshold. You can set it to 1 bar or 5 bars or 10 bars. The point being that at some point this low needs to be taken out, and you need to set the time period for when that is supposed to happen. And so mostly it happens already on the next bar. You see it happens on the next bar here as well. It also happens here on the next bar. And for the later trade here, it also happens on the next bar. So these reversal patterns are usually very pronounced, but if it's not taken out, this high level for the up reversal, if it's not taken out, this bar will disappear. So you will see in my indicator settings here, let's see, I have a trigger period. So for the settings that I have in Blackbird here, I have a stop limit order set to cancel after 3 bars unless it's taken out. So trigger period of 3 bars means that this setup needs to be confirmed within 3 bars, or this up reversal bar will disappear. That's the meaning of that. Okay, TradeStation, no, this is only for NinjaTrader so far. I think that is it for the questions. I don't think I see any other questions here. If you have any other questions, feel free to drop them in here now. Otherwise, also get in touch with me at info@listertrader.com. I'm also available for one-on-one Skype calls if you'd like to speak with me personally, or if you have any questions regarding our indicators. And let's see, we'll check one more time for questions here. Yeah, I think that's pretty much it. Just want to thank everyone for checking in. I hope it's been of value for everyone, and I look forward to speaking with you soon. All right.
Hey, Kris, thanks for coming. The audience always loves when you come and present. Traders, thanks for attending. Like we said, if you're interested in what you saw today, it's lizardtrader.com/sharkwebinar, and stay trading. Thanks again, Kris. We'll talk to you soon. And guys, we will be sending out the webinar recording tomorrow, so just look for an email from Shark Indicators.